All right, here's a video that quite a few of you have sent me a message on or DM me and asked about liquidity sweeps, or some of them people like to call it liquidity grabs. Just going to show you today. I took a trade on a sweep going to the downside on a short entry. But first, what we're always going to do is, I like to talk about is the structure of the market prior to taking an actual trade. Now, I'm going to show you two trades that I took. I posted both of them over on our Discord community. All right. But I also want to show you, using a higher base chart and then moving down to a lower base chart. You can as well look for opportunities to trade supply and demand, because that's what I trade on a daily basis. Liquidity sweeps are just another tool or a strategy or form of strategy that I like to use. If I see a good setup, I'll take that liquidity sweep or liquidity grab just as well. But my bread and butter trade, and the way I trade on a daily basis, is definitely looking for areas or key areas of supply and demand. I love trading range charts because I'm able to see, to me, it provides more opportunities than time-based charts. Now, I'm not saying that 100% for sure, because I don't trade time-based charts. I just, range charts, it moves smoother for me. I'm able to see the setups a lot easier. I don't have to worry about all those big, large wicks and things of that nature. But if you trade time-based or tick or volume, whatever consistently works for you, trade it, all right? Now, what I want to talk about, again, are liquidity sweeps, or a lot of people like to call them liquidity grabs in a sense. It's just where the market has, let's say, made a pool of support or an area of resistance in a sense, either or, and it just slightly breaks through it to where you got a minor, say, break of structure to the downside or to the upside, breaking through an area, but it doesn't break and actually close. We get a full closure of a candle. It kind of just wicks it out and then turns in the opposite direction and moves in the opposite direction, okay? Sometimes you'll see them happen in areas of resistance. Sometimes you'll see them happen in areas of support where the market has slightly broke through an area of structure and then turns back around. So first and foremost, what I like to do is always look. So just kind of disregard the boxes here, because these are areas of both supply and demand that I have marked on my chart. Now, this is on a higher base chart, 120. I use my higher base charts to kind of give me a sense of direction in the market. I always talk about here on the channel, trade in the direction of the market, okay? But let's talk about it as well. And then for all those that asked about this line right here, this squiggly yellow line, that's the VWAP, the volume weighted average price indicator, all right? Typically speaking, when the market is moving above it and we have setups to where the market is above the VWAP, okay, and it pulled back, say, for example, like right here, this is a key area of demand, it's above the VWAP. If you move down to a lower base chart and look for an entry point, then you can find an opportunity to go long, all right? If the VWAP is above us, okay, meaning above price in a sense, like here, as it traded into yesterday's trading session to the downside here, the VWAP was resting above. So we have the supply area right here on the 120 range chart. The market taps into the supply area. It is above, slightly above as it broke above here, the VWAP here from yesterday's trading session, but it taps into a supply area here. If you can move down to a lower base chart and look for an opportunity to go short, then you can take it back down to, say, this area of demand right here. But let's talk about liquidity sweeps, because I want to show you when the market was moving lower to into yesterday's trading session and breaking structure to the downside, as we got a break here, the market broke here, okay, and then it pulled back and broke structure again. Look what it did here. It pulled back into today's trading session early this morning around 4 o'clock during the London session. But look what it did. It made a low, a lower high, and then broke lower right here slightly, okay? All right, so it wicked below that area there. It didn't break and close. On the 120, would this be an actual liquidity sweep? Yes, it is. It's breaking below an area of liquidity right here. The candle turns back around and breaks above, okay? So basically we're looking for a break and close of a candle to the upside, and then you the market moves higher. Now, I'm not telling anyone to trade off of the higher base chart. I'm just showing you examples of what liquidity sweeps or liquidity grabs look like, and you'll see them happen whether it's on a higher base chart like the 120, the 60, and as you further move down or scale down to some of the lower base charts like the 24 and 12 range chart as well. You'll see them as well as on time-based charts as well. If you see on a 4 hour, 1 hour, 5 minute, 15 minute, 30 minute, whatever it may be, you're going to see it, okay? Just as you see supply and demand setups, you're going to see the same thing when it comes to liquidity. I'm going to show you a setup that I actually took today when the market tapped into a supply zone when it started to push higher. Now, into today's session after the sweep right here on the 120. Yes, we did start to break structure back to the upside. We broke them and closed above this area here at 19,810. Pushed up, pulled back, broke structure again, breaking above this area here, tapping into the supply area here from yesterday's trading session. This was around about, I don't know, 1220, somewhere in that area there yesterday. When the market broke lower right here, it made this, left behind this area of supply right here. So the market tapped back into it around about 10:15 today, okay? So again, I'm not taking my trades off of the 120. I'll mark the zones up like I would on my 60 range chart sometimes. But, you know, when I see setups like this that tap into even a higher base chart like 120 and then the market rejects that area, this is a significant area of supply and it's a high probability zone. You know what? Leave me a comment down below. If you know what a high probability setup looks like and you know what I'm talking about, just leave a comment and say, hey, Mike, I know what you're talking about. A high probability setup entails what? Okay, what must I see? What must there be in a high probability setup, especially speaking when the market pulls back to either a key area of supply or demand? Leave that comment down below. All right, I'd like to hear from some of you guys. All right, so we tap into the higher base supply area here on the 120 range chart, right? And then you just move down to a lower base chart. You could actually move down to your 60 range and even further move down to a 24 range. I do want to show you this because as we moved and tapped into the 120 range chart here, okay, at the supply area here, let's move down to the 60 range and I'm going to show you something. All right, so you see with the market, this is that rectangle zone there. That's the 120 range supply zone. The market taps into it. When the market actually moves into that zone, look what happens when it comes back to that area today around 10:15, shortly after that, you know, somewhere in that area there. Okay, now what I like to see once the market hits a higher base zone is a structural break to the downside. Just showing me some indication that the market wants to push lower, basically creating the area of demand to where I could trade and go short from, right? But I have to be mindful because on a higher base chart, we have a demand area resting back down here at 19,852. So it taps into the higher base zone on the 60 range chart. Look what it does. It rejects it, okay? All right? When it got to the zone there, rejects it, pulls away. Okay, but I'm not seeing really, a full-on, meaning a structural break to where it leaves a significant, say, supply area in a sense. I want to see a setup, okay? Now, the market taps into it. It moves away. It does move lower here, okay? And we do get some aggressive selling to the downside here. But to me, I want to see a full-on setup to where it starts to break structure to the downside, leaving behind a nice area of supply, okay? So if I'm trading on supply, I want to see on the lower base what's breaking structure, and we have a key area of supply. But look what happens here. It rejects it, pushes down. When it pulls back, okay, it actually breaks structure a little higher, as you see here, right? We get this wick right here as it pulls back, breaks above this wick here. This is a liquidity sweep, all right, off of the 60 range. Rejects, pushes lower, moves back, slightly breaks higher with the wick of this candle here. This is a 60 range liquidity sweep or liquidity grab. If you get the break and close in the opposite direction, if you trade off the 60 range chart, you can go short there. Again, be mindful about this area of demand resting down here off of that 120 range chart, okay? Now, I'm not telling anyone to take that trade, but if you did take that trade off the 60, then you were golden all the way back down to 52, okay? Because there's demand resting down there on the higher base 120. Now, also what you could have done, you could say, Mike, well, I'm not taking my trade off the 60 because most times I'll take my trades off the 24 or the 12, okay? 60, even though this was a sweep of liquidity back into the supply area of this higher base supply zone here, okay? On the 60 range, it did form or give it kick off an area or liquidity sweep right here, right? As it broke higher here, you could have looked for the break and close and went long. Break and close of the candle and went short. Now, if we move down to the 24 range, even move down one chart lower, then what you see is, as I just showed you, this was that area where on the 60 range where it broke and swept liquidity above here. But this is actually break and close on the 24 range. So if I'm trading off my 24 range chart, then I'm not going to be interested in taking a trade short until it shows me that it starts to break through some area structure to the downside. Now, it moves lower, pulls back, It does break structure lower as it's moving down right here, all right? As it breaks right here to the downside, we got to push, pull back, break structure. But there is no high probability supply area right here or zone right here, okay? Again, if you know what I'm talking about when I say high probability zone, what it entails, leave a comment down in the description portion of the video. Come on, guys. I need some for you guys to kind of leave some comments. I want to hear from you guys. I want to know that you actually understand what I'm saying when I say high probability. All right, what does it entail when it comes to supply and demand? Now, what I want to show you was that there was actually a liquidity grab setup that took place to the downside. So we're looking at a bearish liquidity well, I should say it like this. A bearish liquidity setup because we're looking for the market to push lower off of a higher base supply zone, okay? So it breaks here. There's no supply area right here. And then it continues running lower right here. Pulls back, pushes lower. We haven't quite broken through this, this area structure right here inside this swing, but it does push lower, all right? But when it does that, take a look here. Pushes lower, pulls back, breaks structure on, again, moving lower. So we're making lower highs and lower lows to the downside. And then we get this structural break to the downside right here, all right? Look what happens here. It pulls back. When it pulls back above this area here, all right, it slightly breaks structure to the upside right here above 19,881, okay? Now, this is a bearish liquidity sweep or grab to the upside. In this case here, we're looking for an opportunity to go short. We are moving off or tapping into a 120 range supply zone. So then I need to find something that's going to give me an opportunity to continue or to want to take a short back down to at least that 52 area, that demand zone off the 120. Okay. So this bearish liquidity sweep right here is going to get me into an opportunity to take a trade going short, all right? And that's what I did here. I went short off of a pullback once the market, right here when the market broke above. I just waited for, to show me some indication that it wanted to push lower. So you look for the break and close of the candle to the downside. I got in at 77, so I got a little aggressive once it swept this area of liquidity here. That's why with this ellipse or this oval shape right here, where you see here, I'm marking that liquidity sweep back to the upside, which is the bearish liquidity sweep or grab. It does it and it pushes lower, and you can take it back down to that area around what did I say, 52 or 53. I got out the trade. I think how did I do? Yeah, I did actually took it down to 55. So I got in at 77.25 and I got out around the 55.25. And I'll show that trade right now. You'll see it here on the setup. All right, so this is the sweep right above that, that stop you see up there around 84.25. Again, I was looking for a opportunity to take a short entry because the market had tapped into that 120 range supply zone and it rejected it there. So I was looking for confirmation either at a supply area to go short where the market was showing me that it was breaking through structure to the downside, or, in this case here, this was a liquidity sweep. A bearish liquidity sweep back to the upside to where the market started running lower. Took that opportunity there and was able to pick up, I believe, about 22 points here. So I got in at 877.75 and took it back down to around 855.25. It did actually run a little lower, and it actually tapped right into that demand zone that I talked about on the higher base chart. Higher base charts are king, so you need to really pay attention to, and identify key areas of structure on your higher base charts. And I always say trade in the direction of the higher base chart. Okay. Now I am kind of, if you want to call it counter trend trading in a sense, you see the VWAP resting below us. That's the volume weighted average price indicator. It's resting below us. I'm trading in the direction to the downside towards it, but typically you want to trade in the, if we're above it, then you want to be looking for opportunities to go demand. So this is kind of like counter trend trading in a sense, but again, this is a higher base zone off the 120, and I saw an opportunity to take this trade. So as it unfolds here, it continues pushing down. My TP here eventually gets hit, and when we get into profit, I move my stop loss down here to kind of lock in profit right here, as you can see. And I believe it continues going down here. I think I may have closed out. I'm not sure yet. I know it hit my TP, or did I close out one point early? So I'm waiting to see what's going to continue down, and it pushes down. All right. And Boom, hits my TP pretty much, and I close the trade out there. Now, you guys remember what I said about this demand zone resting right below us, right? Okay, so that's off the higher time frame, the 120. It breaks structure to the upside, comes back to this demand zone right here where this line is resting at 52. All I'm saying is in this trade here, if you notice on the 120, I'm going to show you. This was that area right here. When it came back to the area, I mean, I'll talk about this time and time again. All I was doing was looking for just some means of a demand setup, okay, where the market maybe breaking structure to the upside and it pulls back, and I'm looking to take the market going higher, especially on a high probability setup. This was a high probability setup right here where it pushed up, pulled back, broke structure right here as it pushed higher, came back, and to this area right here at 865 and a quarter. I was looking for rejection to see if the market wants to tap back into it, if it was going to break and close to the upside. And on high probability setups, if we tap into a zone, so this was a zone right here. I'll draw it off right quick just to show you. Right here, when it tapped into that zone, rejected it, I'm looking above here to see, are there any areas where the market may need to fill some gaps back to the upside, some fair value gaps, whatever the case is. Right here in this area here, it still has some area that it needs to fill. So when it pulled back here, I'm looking for the market to run higher and fill this area right here, in which it did. Okay, so it came back, tap into, I moved down from the 120 to my 24 for the entry, break structure to the upside, pull back. Okay, demand zone resting right here, break and close of the candle to the upside, go long. As simple as that. So I talk about these type of setups all day long, especially on the trade breakdowns. Those videos are made private to the elite members. I mean, and for a very nominal fee, you can become an elite member today. It's only $6.99. Not $699, but $6.99 monthly, and you gain access to the trade breakdowns. And I have video after video after video walking you through setups and trades that I take, talking about profit areas, where to place your stop loss, TPs, talk about the trade setups in reference to trading supply and demand and how I do so, and using it across multiple charts, because confluency is what's important. But what I stress is always paying attention to understanding market structure, but also understanding and using paired charts, two charts together, looking at a higher base chart, marking your zone, moving down to a lower base chart to get you into a trade. I've got tons of videos walking you through trade setups, just basically going through my whole mindset of what I was thinking leading up to a trade. So if you want access to those videos, because a lot of you always DM me, Mike, how can I become an elite member or elite channel supporter today? You support my efforts as a content creator, for one, and in return, I'm giving back certain things like the trade breakdowns, all right? And you get the video playlist, and, from time to time, I drop other videos covering certain topics like market structure. So if you want access to those videos, look down, just scroll down to the bottom portion of this video, below in the description. You'll see right below the Discord link, there's a link there that says become an elite member today. Once you click on that, 2 tiers will pop up. Make sure to choose a tier for $6.99 and you'll gain access. If you want to become a Discord member, it is actually free. Just click on the Discord link right above the elite channel supporter link. And if you click on that Discord link, you can gain access to the Discord that way. Okay, so join us on the Discord. But that's all I wanted to really share with you guys today. But I want to go ahead and show you the actual trade that I took right quick, so you can see the break, you can see the full-on trade that I took. Okay. All right, so here we go. Here we are. The market has rejected off that area, and we get the break above. We get a demand setup here. The market's breaking higher to the upside, as you can see here. I'm aiming to fill that area, or for at least to come up and break that high around 19,882, and there's a gap right above that area there where it's approaching that high at. So that's the area I'm looking to the market to take out. And as you can see here, I'm on my 24 range chart. I have my stop locked in, and just looking to see if it's going to push higher or not. Okay, and which I'm pretty sure it was, because we got a pullback to a key area of demand on the higher base chart, 120, and then a rejection on the 24. So look at it. It was almost to the tick there of hitting my TP, and boom, it hits it and closes the trade out, and that's it. So yeah, if you're interested in becoming a Discord member, the link is in the description. If you're interested in becoming a elite member today for $6.99, the link is in the description down below. And if you're not a current sub to the channel already, and you're interested in wanting to learn about supply and demand and using range charts, and Look, I have, oh, I say hi. We have plenty of members that come over to the community that maybe trade time, tick, or volume based, and then they start trading range charts, and they're like, wow, this has really opened my eyes up some. So, maybe give it a go. But as long as if you're already making money and you're consistent trading, look, continue doing what you're doing is what I'm going to say, okay? But if you're interested in becoming a sub today, what are you waiting for? Go ahead and click on that subscribe button right now. Make sure to turn your post notifications on so you never miss one of the uploads. And last but not least, if you found value in today's video, please drop a like on the video right now, all right? Also, make sure to leave a comment down below. If you know what I'm talking about when I say high probability setup, what is it I'm looking for, okay? Take care. I'll see everyone in the next one.